the December contract went off the board, delivery request. There was a massive delivery, something like $400 million worth of silver that stood for delivery and wouldn't take cash settlement. You have short positions. You have silver breaking out in Asia that night as it popped above $54. And the CME just happens to have a cooling failure in their servers for precious metals, but nothing else, not Forex, not interest rates, not equities, just in precious metals for 12 hours until it came back on. We're right at that level where things are starting to break because of delivery requests that used to be papered over and no one ever stood for delivery. That's not the case anymore. And so being naked short to a massive level like some of these idiots are is creating a very big problem. We saw it earlier in the year with the LBMA in London, where they said, no, it's not T plus 1 day, meaning trade plus 1 day the next day. The third day, the bars that you own should be moving your way or into your account. No, it's T plus 8 weeks. We're sorry, Jared, because there's a backup, a shortage of manpower and trucks in London. The Bank of England can't get enough in the way of trucks. So it's T plus 8 weeks for those bars that you were anticipating in 3 days. We're sorry about that. We're seeing that happen, and now it's happening here, right as the United States government makes silver a critical mineral, reclassifying it a critical mineral, putting a floor underneath it, a policy, a national security floor, right as it's breaking out across the globe, breaking through its 45-year cup and handle, breaking through all resistance, breaking through price levels in China before it opens in the United States. And although everything you can think of screams of Fugazi. So yeah, I think it will only go higher from here. Not straight up, but ultimately up. Well, that's physical demand overwhelming the paper shenanigans. With silver, it could be short covering, where they knock it down coming into New York. It was down almost $1, and then bang, it comes right back up after they cover their positions. Who knows what it is that does it? But nonetheless, you're right. In years past, that they would step on its neck and then cripple it. It wouldn't come back. Now it does, whether it be right away like we saw today or over a period of days. When silver went up for 9 straight weeks, no one complained. And then for a week or two, it got beat up. It fell below 50. Everyone said it's over. It's never going to sell your silver. See, sell it. It's a joke. And it goes right back up to 58. The market wants to take as few people along for the ride as possible, Jared. And I think that you have to have strong fingertips sometimes. That's why so few people succeed in investing. That's why there's a whole school of investing ideology called wave theory, Kondratiev and Elliott wave, that speak to human emotions drive the markets. And people got very emotional when the market moved down over a period of a week or two, but not a word out of them and when it went up for 9 straight weeks. So emotions can get the better of people. I think they have but no choice to continue to do it. The problems in the repo market, the problems with the labor market, they have no choice. They'll lower rates again. And if you think about it, they're at the best they've gotten is 50% away from their target. That's not real accurate when you're 50% away. So trying to throw a ball 100 yards, you make it to the 50-yard line. Not going to work probably for your Hail Mary. Not to say anyone can throw it 100 yards, but you got my point. And so, and not yet they're giving into inflation. They're giving up on inflation, giving into the economy at a period of time when they're not even 50% away from their target. And the measurement that they use is all messed up. The CPI issued by the BS, the BLS, where they exclude food, energy, and housing and continually pull things out that are inflating like coffee and substitute it with tea, because surely no one would buy coffee if the price was going that high. These are the types of hedonics that they use to fit their inflationary agenda. The real level of inflation is 11%, according to Shadow Stats, which just measures it based upon the way it used to be under previous administrations like Carter and Reagan before it was completely changed. And so, inflation is much higher than we're told, and they're going to give into it through lowering rates, through quantitative easing, through the reduction or end of quantitative tightening. They won't continue to sell assets off their balance sheet. It's not good. And you can expect a weakening dollar. They say the dollar is only down 9% this year against a basket of crap currencies, that being the dollar index. But look at it against gold or silver or platinum.
Yep.
It's down 70+% against platinum and gold and almost 100% against silver. So what is the reality? Is the dollar down 10% or 80 or 90%? It's down against gold, silver, and platinum, real measuring sticks. I would say gold being the best, almost 75% this year. Look at it last year. The 10-year treasury was up 4%, gold was up 45. Why would anyone hold our treasuries? Why would anybody? It's doubled the performance, that being the gold, over the 10-year treasury for the last 25 years. Why would anyone hold any duration financial instrument of the U.S. government when we are as fiscally irresponsible as we are and have signaled to the world, screw austerity. We're just going to print. Where in the 6 weeks we were shut down, we added 600 billion to the debt. In seconds, 20,000+ years ago. So, I don't know. I think that they at this point realize that it'll be a bigger problem if you see massive layoffs, because the system is just gummed up. And so they're going to give in, and I think they'll lower rates. It's coming out of the ground at 7-1. It's averaged about 45-1 for the last 100 years, price-wise. And that was with a 16-1 geologic ratio. Now it's 7-1. It's disappearing. And the demand for it is out of control, with the U.S. government just classifying it a critical mineral. China doing the same thing and massively reducing exports. I would say to you that is definitely not the time to do it. For 5,000 years, the geologic and price ratio was 16-1. Go back to the Romans, it was 12-1. It's been 16-1. Sir Isaac Newton figured out the amount of gold and silver for the currency. The UK, I don't know how many hundreds of years ago, 16-1. Now the geologic ratio, because silver is found in nature in a form called epithermal, like your skin is epidermis right near the surface, the big deposits have been exploited a long time ago. And so the geologic ratio is 7-1. Man's ratio, because of gold's role as money and silver in industry and suppression through the military industrial complex, whatever way you want to look at it, which is undebatable as far as I'm concerned, but has been roughly 45-1. The further away you get from historical averages, the greater the magneticism that pulls you back, because I would know it's an anomaly. Now, price anomalies can stay irrational longer than you can stay solvent. That's an old market truism. But anomalies typically do resolve. Mother Nature gets her way. And this one will too. It just is taking longer. But if you realize it comes out of the ground at 7-1 and it's averaged roughly 45-1, then why wait? Why not wait until it gets to that point? You're talking, 50% less than you could otherwise get if it just gets to its average. And just getting to its average is a double. And that average is almost 150 years long. And it would still be 6 times higher than it's coming out of the ground at 7-1. Yeah. Typically, that's how it moves. Gold goes first, silver goes further percentage-wise after it lags behind and then catches up and passes it on a percentage basis. That's why I've always tried to bring the two communities together, Jared. I've always tried. I speak at the XRP convention and go on shows like Black Swan. I'm going on Thursday. Versan and Vandel. I've been on several of the XRP shows and speak at the conference. And I've had Natalie Burnell on my show twice. I've been on Mark Moss's show, and he's been on mine. And, these are Bitcoin maxis that have done very well and are very smart. My idea, it's not that I'm a Bitcoin person. I'm really not. But I think that it's stupid for the two communities to be adversarial rather than complementary. It's like a Reese's Pieces or a Reese's Peanut Butter Cup. You go better together. I think that they walk into the same door for the same reason: the dysfunction of the currency, the lack of or a decentralized platform, fiscal and monetary irresponsibility. Great. Bitcoiners take one turn to make profit, and the gold people go the other, largely to preserve. Yeah, they want to profit, but why not take some of your winnings and move it over to gold and balance out your position and be complementary with one another, because it makes your understanding of economics, macroeconomics in general, geopolitical, it makes your understanding of the whole ecosystem stronger and better. And really, it's the same understanding. It's just one is about profit and the other is about savings. So take that profit, put it in the old school savings, and leave the casino with money in your pocket no matter what. As the public is all in on stocks, the largest allocation to stocks they've ever had, 45% or so of the market is by retail investors. The largest exposure to options, which is speculation, and the largest exposure to margin debt, which is leverage, at all time, 1.5 trillion in margin debt. As the insiders are selling, and who the hell is buying billions and billions and billions and billions worth of gold and silver since November? Every month, we're net importers of gold for the first time in my career, and other than brief episodes, maybe ever. So who's buying all this gold? People at that level don't do things just for the hell of it. They know what's coming. At the same time, they're quietly exiting the equity markets as the public's all in. So I would say whether or not Warren owns it, I think it is being accumulated by the most well-funded and well-informed traders in the world. And you can see that not only by the bleeding down of metals out of the LBMA, the massive deliveries way out of the ordinary every single month here on COMEX. Again, just the first 2 days of the COMEX contract, the December delivery, and I didn't see yesterday, which had been the third day. You're talking, I don't know, 8. Well, let me give you the exact numbers, but billions and billions. So far, just in the first 2 days of the December contract, but this has been like this every single month. The first 2 days of the December contract, because it's important, it speaks to the biggest money in the world. Okay, day one, December silver contract, 7,330 contracts stood for delivery. That's 36.65 million ounces, worth more than $2 billion. Not a record. April saw 11,692. And as mentioned further up in the daily delivery report, we're only into day two of the December deliveries, and there's already been 2.397 million ounces of gold delivered, plus a knee-wobbling 41.525 million ounces of silver issued and stopped. Those are in 2 days. You're talking billions of dollars worth of gold and silver every single month. Who the hell is doing it? That's the insiders, who are the most well-informed, the same ones that are leaving the equity market. You wonder if Warren is in there? Probably is, through some sort of a fund or whatnot. And when you buy stuff on the CME, there's no disclosure. If you're a massive bank, you have the COT report, Commitment of Traders, which shows the positioning of the biggest banks. You can see and figure out probably who bought, who sold. But, the biggest money in the world are draining the exchanges and standing for delivery, as the public is doing the opposite.